Hey, welcome back. Today we're going to talk about accounting, but this is probably my last egg before Easter, and I just found this one. Let's see what it has inside. Um, Something inspirational. Oh, you know what it says? Perfect for Easter. It says take a break. Take a break.
Hey, our kid is pretty great.
Run away with us for the summer. Let's go upstate.
Lies, I've got so much on my plate.
I'll go stay with my father. There's a lake I know in a nearby bar. You and I can go when the night gets dark. Okay, I know that we've been listening to some heavy metal, which I appreciate 80s, but I'm actually kind of a show tunes girl, and that's from Hamilton. If you have not seen Hamilton, you're with me. I haven't seen it yet, but I really want to see it. And that's a song called Take a Break. If you liked it, listen to the rest of it. It's pretty fun. It's got some little rap in it. It's kind of fun. So this weekend, I hope you can take a little break from school. Actually, you're kind of always on a break, aren't you? Living at home, sleeping in your bed. I Zoomed with some kids the other night, and they're all just like laying in their bed. You guys all have your little 70s hippie bedrooms, which are so fun. It's just fun to see you in your element. So I hope you're doing great. Take a little break this weekend. Enjoy some time with your immediate family, but don't get too close to them. Stay safe and well. And let's just talk a little bit about accounting. So I'm like the anti-accounting person. I am not really very accounting minded. Miss Tillema is, Miss Stefan is really good with accounting. Mrs. Maring is. Um, Accounting is really, really, really important. So, excuse me, what is it? It's keeping financial records. It's also a really great career choice. So, students who take accounting with Miss Telma, like either really love it or like not so great about, not so great. Accounting is keeping track of all of your money and making sure you're paying your bills on time and that you are ordering things that are appropriate for your company and making sure that others pay you on time. So there's a really kind of dorky video on finance versus accounting. We're going to talk about financing next week, but it'll show you kind of the difference between them. So today we'll just talk about accounting. So what do businesses track with accounting information? They track the value of things that are owned. So there's something called depreciation. So the minute that you buy something, it starts depreciating in value for the most part. There's some things that appreciate in value, like antique cars. But like if you buy a car, the minute you drive it off the lot, it usually depreciates in value for the most part. So accountants have to keep track of the value of all of those things that they own, which are called assets. And then they also have to keep track of things that are owed to them, which are called accounts receivable. So money that you take in as an accountant is called accounts receivable. And they also keep track of amount that people owe them, which are called accounts payable. So when people are paying you money, it's called accounts payable. When you are receiving money, it's called accounts receivable. When you're paying money out, payable. When you're receiving money, accounts receivable. When you are paying money out, you're usually paying something called a liability. So there's different kinds of liabilities. So you might hear of like liability insurance, which is like on your car that you have to pay for, but liabilities in a company are money that you owe. Who uses the information? So usually internal managers look at your accounting record books and take a peek and make sure that you're paying your bills and that things are balancing. Externally, investors also look at it. So we had a banker in speaking in our HSB management class a little bit earlier this year, and he talked about going to Wall Street, and people were looking at what his stock should be worth for his bank. Um, it was Westbury Bank, and they looked at his records and his books, which the accountants prepare to make sure that they are doing what they should be doing, paying bills and investing where they should be. Creditors, so people who want to extend you credit to like build a new building or to add on or maybe add a new product or service, they look at your accounting information as well. And then the government makes sure that you're doing things legally. There's some companies like Wells Fargo has gotten in trouble for doing having falsified accounting records. Okay, so what are some things that an accountant does? They analyze financial transactions. So they look and make sure that we're paying out what we should be paying. That would be a transaction, and we're receiving money that we should be receiving, and that's a transaction as well. Are we paying with cash? Are we paying with credit? Are we paying on account? That's kind of hard to explain right now, but that's okay. So they make sure that's all recorded, journalized, and generally that's done, excuse me, with an accounting system. At home, your parents might use like QuickBooks as their accounting system if they have a business, or if they do their taxes at home, they might use that. And then there's also something called cash accounting versus accrual accounting. And there's a quick video on that. I think it's in the speaker notes. If it's not in the speaker notes, um, it's probably in the lesson plan. But it's not a huge deal that you know them, except it's in one of the post-test questions. It's in the lab for sure. They post them to the ledgers, which is generally done on the computer. In the old days, they used to do like a handwritten ledger where they'd write down things. And then they make sure that things are balanced. So cash versus accrual accounting. Oh, here's the video that I was talking about. Cash accounting is when income isn't counted until the actual cash or check or credit is received. Um, and the example is not here, it's in this video. Accrual accounting is when you count the income when the transaction is actually made. So if you buy something or somebody buys something from your company and they don't pay for it for a while, then when you get the payment, you would be using cash accounting. Accrual accounting is when you actually like get the transaction. So there's a little video on that, and here's just a link to more information about cash versus accrual accounting, and it's in your lab as well. There's three financial statements that most accountants use. I won't go into great detail on them. There's a little video on balance sheet versus an income statement. Basically, a balance sheet shows a balance between assets, liabilities, and owner's equity. And so assets are things that you own, liabilities are things that you owe, and then owner's equity is what the owner actually has. So there is, here's what I was looking for, sorry about that if you're dizzy. This is a balance sheet example. So these are the total assets that a company has, and you can see the total right there. This is the liabilities and the owner's equity. Liability amount that we owe. Owner's equity is the amount that the owner owns of the company. So these are balanced. So that's what a balance sheet looks like. That's one accounting statement that accountants make sure that they're using. An income statement is a profit and loss statement, or some people call it a P&L statement. So an income statement basically measures how much money you have at the end of the month. It's a really simple example of a income statement. So if you think about a company that you go to, like Best Buy, how much they sell things to you for, what the cost of those items are, and then they subtract all of the expenses that they have to pay, like electricity and salaries and insurance and supplies, and then like their mortgage and their taxes, and then at the end of the month they'll have a net income. So accountants keep track of income statements, and usually they're done once a month and then annually. And then a cash flow statement, I'm not even going to click on that one, is basically how much cash is going in and out of your business. Obviously, if you don't have cash flow, then you're probably not doing super well in your business, as many businesses right now are struggling because they're not having cash flow. So watch this quick video on balance sheet versus income statement, and then next week we're going to talk about financing. I hope you have a really amazing 5-day weekend. That's crazy. And do something fun and take a break. See you soon. Bye.